Gold is a foolish place to put your money right now if you check the facts. You got to bear in mind that when it comes to bull markets, historically, the biggest daily moves are down. That's how it happens in a bull market. The opposite in a bear market, you get the biggest moves to the upside in bear markets. And what the market is doing is trying to flush out the weaker players. When it comes to a bear market, it's trying to create some hope and sucker people back into the market by having a really big rally. Well, in a bull market, it's the opposite. The market is trying to instill fear in the weaker hands. So you get these spectacular one-day moves in the opposite direction of the primary trend to shake people out, to get the weaker players out of the market so that you can clear away the excess baggage and then continue the trend. So usually in a bull market, you don't get the really, really big up moves until the end of the bull market, right? Near the end, you get kind of a euphoric blow off top, and then you get these spectacular big moves to the upside. But along the way, the bigger, more dramatic moves in a bull market are to the downside. And that's, I think, exactly what we had today in gold and silver. We had this big move to scare out a lot of the newer buyers who maybe just recently got on board, and now they're getting their wrists slapped, and now maybe they got stopped out or they're going to sell and they're going to leave the market. You don't want to buy numismatic coins. You want to buy bullion coins, right? Coins that don't have any kind of special additional value because of their rarity or their appeal to collectors. You want to buy gold and silver that trade at a very, very small premium to the melt value of the coin. Because you don't want to be a coin collector in this environment. You want to be a gold and silver investor. But yeah, I think prices are headed much higher. But again, if you want to make the most money and you're willing to take more risk, then look at the mining sector. These gold and mining stocks, I think, have explosive potential. But obviously, you can't have all of your money in mining stocks and gold. You got to have a more diversified portfolio. I want to own predominantly equities because I think it's going to be a global inflation. All the central banks have printed money, so we're going to see elevated rates of inflation worldwide. I just think it will be higher in the US than in a lot of other countries, but still, I want to own assets, not paper, because inflation transfers wealth from creditors to debtors and from owners of paper to owners of real assets. So we're buying quality companies, utilities, property stocks, teleco, tobacco, some online type companies around the world that have good valuations, that are offering products and generating revenue in currencies that I think are going to retain their value much better than the dollar. So whether they're in Switzerland or Singapore or Norway or New Zealand or Hong Kong or Australia, I mean, there are places around the world that I think are in much better shape. Even Canada is in much better shape than the US, especially if I'm right on what's going to happen to gold and silver. There's going to be a mining boom, and so that's going to help benefit the entire Canadian economy, not just the mining sector, but all sorts of areas of the economy that will benefit from a booming mining sector. So you want to invest in assets that are countries that are going to be enriched. You want to align yourself with the people who are going to enjoy a rising standard of living relative to Americans who are going to suffer a diminished standard of living. I will not get involved in gambling with crypto. I would discourage people from buying any of the cryptocurrencies, including Bitcoin. I suppose if you were only going to buy one, I mean, maybe that's the one, but I think they're all going to go down. So I think as a trading vehicle, if you're looking for something that you can trade and you're just getting in and out and you think you can get out before the bottom drops out. But personally, I'd rather, trade the mining stocks. At least in the long run, those are going to go up. So you don't have to get worried. You don't have to be worried about being caught long when the music stops.
I do expect these cryptocurrencies to crash. I think eventually they're all going to go down to zero or pretty close to it. I mean, who knows if Bitcoin will get all the way to zero? It may have some small value, as you know, people trade bankrupt stocks. You know, they're worthless, but people still trade them. So there still could be a trading market, but I think that trading market will take place at a level much, much lower than we are now. So my advice to people with any crypto is get out. And if the reason that you own crypto is because you're worried about inflation and a weakening dollar and you want to hedge, then buy real gold. Don't get distracted by fool's gold. Buy the real thing. I think the US dollar is going down against all the major currencies, and that would include the Canadian dollar. And I think a resurgent price of gold and silver, you know, that will help the Canadian economy. I also think oil is going to come back when the dollar crashes, and so that will also be helpful. I mean, anything that puts resources back in play should be good for Canada. I think the emerging markets have the most to gain from the dollar's collapse. They've been under the most pressure from a strong dollar, and so they will get the biggest relief from a weak dollar. And I think those economies will boom, and I think their demand for resources will go up. And so whatever Canada doesn't sell to America, they'll be able to sell in Southeast Asia, and I think they'll do even better. Well, I said, you know, we own a broad basket of stocks that we consider good value. You know, we have some online casino companies that we thought, you know, represented good value. In fact, we recently took profits in one that had gone up about sixfold in the last couple of months. So we sold one, but we're in that sector. But there are a lot of sectors. We own the tobacco names. We think they're pretty cheap. We're adding to our energy positions. You know, I think that there's some value there. We were very overweight pharmaceutical companies. We've been lightening up a little bit there because they've done pretty well on a relative basis. But look, there are a lot of companies. Telecom, we're overweight. We've added to telecom. Those stocks, I think, are out of favor. They've been out of favor for a while. But a lot of the stocks we're buying are paying 6, 7, 8, 9% dividends. You know, when, you know, bonds are paying next to nothing. So you're getting great dividend yields on a lot of these assets, and there's good valuation. You know, unlike the crap that people are buying in the US that pay no dividends, and it's sky high valuations. I mean, they're playing with fire. I mean, there's a lot of momentum, but when the momentum goes away, you know, they're going to drop like a rock. So a lot of people who are in these stocks are waiting to lose a bunch of money. They just don't realize it. I'm waiting to make a lot of money. In the meantime, I'm getting paid to wait.